All right, good afternoon, good evening, everybody. It is Tuesday. I think it's Tuesday. Yeah, it's Tuesday. It is Tuesday. Tomorrow is a big day on Wall Street. Now, the reason why I say that is obviously last night on the stream we talked about the kickoff or the official beginning of the Q2, so quarter two earnings reports. So there's going to be a lot to talk about that. But on Wednesday, which is tomorrow, which will be the 13th of July, the Bureau of Labor Statistics will release the Consumer Price Index for June. Now, many economists on Wall Street that were surveyed are forecasting about an 8.8% year-over-year jump in inflation, or in the CPI. That is compared with a 8.6% increase in May. And that's going to be a 40-year inflationary high. Now, the core CPI, which excludes the volatile food and energy prices, is seen rising 5.7% compared to 6%. Core CPI has cooled off a bit since hitting a record peak of about 6.5% in March. Okay, so why is that important? Now, obviously, the CPI numbers is what the Federal Reserve watches extremely closely. But the core CPI, which is a number that they tend to watch a little bit more closely, that number seems to be peaking. Now, there's been a lot of whisper numbers on the street today. I think there was one crazy number about 10% CPI. Now, CNBC has since came out and said that number is fake news, that is debunked. I believe BNP Paribas leaked that number or leaked that information. I'm not sure the exact investment bank, but all of the CPI numbers that you guys may have been seeing come out today are not the real numbers, okay? So no cause for concern there. But as we've been talking about, I wanted to talk a little bit about crude oil prices. Now, if you're following me on Twitter, or if you follow @WalksWallStreet, we've been covering this for probably about 2 months now, maybe a little bit longer. So if you remember correctly, in March, the price of crude oil, the crude oil futures contract, ticker symbol CL, traded as high as $130. We have since retested that high, maybe about $10 off, about $120, and now we are trading below $100. Okay, so I think we closed today at about $95. So that translates, well, it should translate into, lower oil prices at the pump. And that's good news for the CPI numbers. So it's very, very possible that inflation may have peaked. Now, I'm not saying inflation can't go higher. I think it's hit at least a temporary peak. But we'll talk about that a little bit more. So if we think about the core CPI number, I believe we got our highest reading in May. No, not in May. I think it was April. I think we got our highest core CPI reading in April, and we have since been, getting pretty hot CPI numbers or core CPI numbers, but we have had some deceleration there. So even though the headline CPI number continues to increase every single month, if we look at that core CPI number, which obviously excludes very volatile food and energy prices, that has actually peaked, I believe, and we should see further declines. So I just wanted to say right off the bat, before we really get into the stream here, that any numbers that you may have seen on Twitter or forecasted, maybe talking about on Bloomberg, those numbers are not accurate. I was reading one lengthy Twitter thread that, one portfolio manager really thought that it was a 10% leak or a 10% CPI. That is not the case, so that is not true. Consensus is for about an 8.8% CPI reading. But now we will start the stream. So everybody, we are here, 6th Avenue and 59th Street, Central Park South. So we'll see who we have in the chat and we will get started. I see Mr. Ming is here, says, hey Tom. Otto is here, says hi. Good to see you, Otto. Always a pleasure to have you here. The one and only ABX Girl is here. Welcome, ABX Girl from the Bronx. We have Gregory, we have Dante Rose, Shauno, Blanket, Jaggers72 is here. Vinny Castellano says, hello, Tom. Vinny sends his best. Vinny and Maria Castellano are checking in from Staten Island. Always a pleasure. Hopefully you guys are well. Raphael is here. Dr. Longus, Mets fan 1023 says always be closing. Agreed with that, my friend. NMB 045 says happy Tuesday, very humid and rainy. Yeah, so NMB 045 and the rest of the chat, we may have to cut this stream a little bit short tonight because there is about a 50% chance we get severe thunderstorms and rainstorms any minute tonight. And I don't want to be walking around in the lightning. So we'll play that by ear. Hemp Lord is here, says, what's up, Tom? I'm ending a 6-mile walk from Charleston. Love that. Good to see you, Hemp Lord. The one and only Sally is here. Wendy England, good to see you. Long time no see. Rady M says hello from Long Island. Good to see you. I just came from Long Island today, by the way. Jeremy Kong says, hey, Tom, I am watching another live stream, but I could type a message at the same time. Awesome, Jeremy. Thank you for being here. We are overlooking Billionaires Row tonight. Overlooking Billionaires Row. So I think we're going to cross 59th Street, Central Park South. We are right across the street from the Ritz-Carlton here. And tomorrow is going to be a very, very big day on Wall Street. Obviously, we're getting that headline CPI number, so the Bureau of Labor Statistics will be releasing their core CPI number, which is a huge, huge gauge for inflation. Now, one of the reasons why a lot of portfolio managers are really, really paying attention to this number is because it's probably going to dictate the future of monetary policy. Okay, so what do we mean by that? So Fed Chairman Jerome Powell and his friends at the Federal Reserve, their number one goal right now is to cool off inflation. And one of the ways they do that, sorry about that. And one of the ways they do that is by raising interest rates, okay, or raising the federal funds rate. And let's say that if consensus estimates about an 8.8 CPI print, let's say if we come in extremely, extremely hot at about a 10, well, that means the Federal Reserve is going to get extremely aggressive in continuing to raise rates, and we may even get an additional 75 basis point rate hike. Now, why would that be significant? Well, at the last FOMC meeting, which is the Fed meeting, we did get a 75 basis point rate hike. That was the largest rate hike since 1994, so since before I was born. So if we get a really, really hot CPI print, I think that you could see extremely, extremely aggressive action by the Fed. But also, on the other side of that, let's say if, the CPI numbers come in and we have some deceleration there. So let's say if consensus is for a CPI of about 8.8, but we come in at about a 7, well, that's actually going to be really, really good news, because maybe, just maybe, the Federal Reserve and Fed Chair Jerome Powell will actually take that into consideration, and maybe they will not raise interest rates as fast. And the reason why, that's important when we're talking about stock prices specifically is because as interest rates go up, generally, as interest rates go up, the future value of companies' cash flows go down, especially for very high beta tech stocks. So if we've looked back over the last 6 months, the first particular stocks on the market to really come under pressure here were the very, very high beta, high growth, software as a service, enterprise software stocks been coming under pressure due to the rate hikes. But a lot of that activity could be priced in. So we will be covering that tomorrow. Actually, I will not be live tomorrow. I will be traveling. So maybe if you guys are in the Discord, we'll be talking about that CPI number tomorrow. But just keep an eye out for that, because that is probably the most important piece of economic news we are going to get all week. Okay, so now we are on 57th Street. Maybe we'll take a right and walk outside of the Grand Hyatt building. Hey, I see Horatio Snipes is in the chat. Good to see you, Horatio. Always a pleasure. Jay says, good evening, Tom. I hope you had a great day. I did, Jay. Hopefully you had a good one as well. Chris Beeman, welcome. So Chris Beeman is joining us from the one and only Arizona. You know, I was hearing from some friends in Arizona today. Supposedly it was like 111 degrees today in Arizona. Absolutely crazy. Wendy Englands has walked from Wall Street. The Bank of Canada is raising interest rates by 0.75 tomorrow or something this week. Yeah, you know, a lot of, if we look at central banks around the world, we're seeing an extremely, I would just like to say, obvious trend. But here's the interesting thing, and I always like to bring up Japan, and I think it's important to talk about global currencies a little bit tonight on the stream, because we did have some news coming out of ServiceNow. And for those of you who don't know what ServiceNow is, it is an enterprise software company. The CEO is actually Bill McDermott. So if you want to look at the ticker symbol is NOW. The ticker symbol is NOW. And we had some news come out of Bill McDermott's mouth today where it was kind of interesting the way he said it, because we were talking about this last night on the stream. We were all having a conversation on the stream last night about watch out for this earnings season, because currency pressures or currency exchange rates are probably going to put pressure on earnings, especially for multinational companies. And right as we were talking about that last night on the stream, you know, we get this news from Bill McDermott, CEO of ServiceNow, this morning, saying that he is expecting extreme profitability impacts in his business due to the crazy wild currency swings. Okay, and the reason for that is because if you look at an index of the Dixie or the DXY, which is the dollar index, I believe we just broke out over the highs of 2016. You know, if you look at some of the European currencies, we are now on parity with the pound, I believe, for the first time in 20 years. So this building we're looking at right now, 432 Park Avenue, the building actually to the right of it is Trump Tower. So we'll take a little bit of a walk past there. But the reason why I wanted to bring that up is if we think about central banks, not only the Federal Reserve, but the ECB, the European Central Bank with Christine Lagarde, it seems as if everybody is doing the same thing, right? They are going into quantitative tightening and raising rates. Now, who is the outlier in all of this craziness? And that would be the Bank of Japan. So the Bank of Japan has been very vocal about coming out and saying, well, we're actually not going to raise interest rates at all. We are going to continue to adopt our policy of quantitative easing and actually negative interest rates. So in Japan, you have negative interest rates. And I think this is why we've seen the huge sell-off in the Japanese yen. So we've been talking about this for quite some time. But I think the yen US dollar pair reached an all-time low. So the yen is getting crushed. The dollar is getting extremely strong. And this is definitely not good for emerging markets. Definitely not good for emerging markets. It's good for Americans who are buying foreign products, right? So let's say if I was going to go take a vacation in Japan or buy Japanese goods and services, it would be good for me because my dollar is going to go a lot longer. The purchasing power is going to be there. But everywhere else around the world, you know, their purchasing power is eroding in dollars. Hey, OF is here, says, and if the reserve banks have a track record of being wrong, Japan may be right, says OF. Good to see you. Sabrina Fair is here. Welcome, Sabrina. Good to see you. Hope you're doing well. I see David C. Randall says, good evening, my friend. Good to see you, David. Hopefully you had a fantastic Tuesday. Yeah, Emmanuel says, hey, Tom, this is the best time to travel to England. You were right. You were right. So for the first time in 20 years, I think our currency is on parity there. Zone says, do you see an opportunity in investing in Europe now that euro is valued less, like buying a property there? So for me personally, I don't think I have enough capital to work with to maybe purchase a property in Europe. But maybe if you're an ultra high net worth individual, maybe. But I don't know. I think I actually see more value in some places in the United States, some specific sectors there. But I think this earnings season is going to be very telling. Okay, so if earnings come in and they absolutely bomb, that is really, really not good. Because as we talked about last night on the stream, the S&P 500 is trading at roughly 16 times forward earnings. Okay, but if we have many S&P 500 CEOs coming out and saying, the economic environment is changing rapidly, we haven't expected it to change so fast, and we are now lowering our earnings estimates, that means the S&P 500 is actually trading at like 19 times earnings, in which case, in order for the S&P 500 to trade at, 16 times earnings again, or 13 times earnings, you're looking at 3,100 on the S&P or even 2,900. And this is why all the time on the streams, I really, really stress about earnings. Okay, if you go into Microsoft Excel and you want to chart the trajectory of earnings in the S&P 500 or S&P 500 earnings, price follows earnings about 100% of the time. So if we go into what's called an earnings recession, this market could go a lot lower. But if we go through this earnings season, Friday we're going to hear from all the big banks. We're going to hear from Blackstone, I believe, or BlackRock is on Friday. We're going to hear from Bank of New York Mellon. We are going to hear from PNC Financial Services, PNC Bank. So if this earnings season comes in better than expected, I think that this market is definitely a buy. But, if we see across the board S&P 500 CEOs saying, look, inflation is eating into our gross margins, currency, exchange rates are eating into our margins, eating into profitability, analysts are going to take these forward earnings estimates down a lot. And I think that you're going to see an extreme valuation change here. Hey, Dutchman is here, says, SW, nice you have come to Tom's channel. Good to see you, Dutchman. Caleb says, hey, Tom, does the Empire State Building shut off overnight? No, it doesn't. So I think the lights at the Empire State Building come on at dusk. So maybe around like 8 o'clock, 8:30. Rusty Golfer is here. This is good to see you. Good to see you, Rusty. Always a pleasure to have you in the chat. Jay Einstein is here. Says, hi, Tom. Good to see you. Kirby says, will the stronger dollar get U.S. cheaper crude oil? Well, I think we're already getting cheaper crude oil prices. If you want to look at the futures, if you type in, to Google, or if you have tradingview.com or something like that, the ticker symbol for the crude oil futures contract is CL. CL. And take a look at the chart. Throw a 200-day moving average on there, throw a 50-day moving average on there. In March, I think we actually were streaming the top tick in crude of about 130. And I think last night we were talking about, we're seeing all of these crazy articles come out from, come out from Barclays, come out from JP Morgan Chase, calling for $300 crude oil. And that's when you could really just say, all right, prices are really going to come down here. Okay, so usually the way news cycles work is when investment banks put out these really overzealous, over-the-top, crazy price targets, they usually do that as a way to stir liquidity in the market, to offload their positions to, retail investors, or sometimes to even their clients, as horrible as that is to say. But crude oil is trading under $100 a barrel now. I think we're at $95, all the way down from $130. And this is what has me believe that we could potentially see a lighter than expected CPI number for tomorrow. Okay, so the headline, as I like to call it, the headline CPI number includes the volatile food and energy prices, right? But if you look at the core CPI number, that is what excludes the very volatile food and energy prices. And over the past 3 months, we've actually seen a peak in the core CPI. So I think this is going to be the first time we may see a little bit of, peaking here in the headline number. But we'll see. Hey, Bagels and Walks says, hey Tom, Fifth Avenue has great clocks. Indeed it does. So we are standing directly outside of Fifth Avenue and East 56th Street. We are standing right outside of the Trump Tower. SUI 812 says, hola Tom, hola to you. Thank you for being here. Thank you for coming. Dutchman says, Tom, a person who owns a convenience store here in Phoenix, Arizona is selling his gas for $3.99 a gallon to help people even though he's losing money. Gas on the area is selling at $5.10 a gallon. Wow. Well, that's a really nice thing for him to do, to be honest. Nicholas Duras says, look at the ridiculous... Let's keep that out of the chat, please. Kathy Lyons says, hey Tom, hope all goes well. Thank you so much. Andre Brown says, hey Tom, where are you tonight? So we're walking down Fifth Avenue. We're walking down Fifth Avenue tonight, Andre. Arnold says, hey brother, appreciate your effort every day with the streams. Much love. Thank you so much for being here. Appreciate it. Hey, Michael Welch Jr., our good friend from Whole Foods. Michael Welch Jr. is actually, I believe, runs the Whole Foods there at Union Square. Thank you so much for the $5 donation, my friend. Says, hey Tom, it's been a while. Hope all is well. Everything is going good. Thank you so much for the kind donation, the generous donation, my friend Michael. I hope you are doing fantastic. Michael Welch Jr. says, I'm currently at Whole Foods right now. Little Yell 69 says, do you need a car to live in Nassau? Western Nassau County? Yes, you do. I would say yes. On Long Island, there is the Long Island Railroad. The buses are not as good. I think if you want to, get around pretty easy, I think you do need a car out there, to be honest. OF says, how bad is the heating resource situation going to be in Europe? USA impacts. Well, I think Germany dug themselves into a ridiculous hole. And not to get too political, but I don't know what Germany was thinking. They essentially made their entire energy economy dependent on the Russians. I don't know why you would want to do that. And I understand the whole, transition to green energy and clean energy. I get that, and I actually support that. But I support doing that in a rational, respectable way, where it's not going to essentially kill your economy and force your entire economy to be dependent on Russian oil, especially during a time like this. Ralph is here. Good to see you, Ralph. Welcome. Steph Wright says, good to see you, Steph Wright. Obo Helma is here. Welcome. Andy S. is, when is the pound expected to rebound? I'm not sure. I think we're seeing a lot of this dollar strength here because the Federal Reserve is getting really, really aggressive on raising rates. So it seems like a big flight to safety in the dollar. So everybody, we are now overlooking the St. Regis Hotel, which I believe is a 5-star hotel right here on the corner of Fifth Avenue. Beautiful architecture. I'll just give you guys a quick pan up to the rooftop here. Thara Soup says Janet Yellen doesn't approve of this. Yeah, Janet Yellen would probably not approve of anything we're talking about on the stream. Only if we're talking about modern monetary theory and things like that. That's a funny comment. It's actually really funny. Little Yell says, friend of mine is high on Russian stuff right now, especially the ruble and ETFs. Thoughts? Also beautiful hotel. Yeah, I don't have any exposure to Russian equities, so I really can't make a comment on it. I really don't follow it too much. I do follow the global macro picture, but I don't really drill down into the individual stock names. I don't really know anything about Russian individual stocks to give sort of my opinion on it in full transparency there. So these are really, really nice shoes here. You know, those ones on the street, for anybody who's in the investment banking world, sometimes they call them deal sleds. Deal sleds. Kind of a unique, funny name. But these are nice shoes here. Carpert says, good morning from India, welcome. Alvin says, hey, good evening, I'm enjoying watching your video. Nice weather today, keep safe. Appreciate that, thank you so much. You know, we are on thunderstorm watch tonight, so I just do want to set the expectation with everybody that if it does start lightning out tonight, we will have to kill the stream early. I don't really want to be walking around in the lightning. If it rains, it's fine. That's fine, but if it's lightning, we're going to have to cut it short, to be honest. But yeah, so what do you guys think about now that we have some people joining here? You know, I thought it was so funny. I actually laughed to myself today at my desk in my office. I see a big headline come across CNBC today, and it's talking about an enterprise software CEO, which we talk about all the time on the channel. You know, we talk about ServiceNow probably once a month. So Bill McDermott, who is the CEO of ServiceNow, he came out and said that the strong dollar is going to put an extreme impact to their bottom line. And he actually said that it's not only exclusive to ServiceNow's business. He's like, you're going to see this across the entire suite of enterprise software companies moving forward into this earnings season. And this is exactly what we were talking about last night. We briefly talked about how Microsoft's chief financial officer came out last earnings season. These are nice shoes too, these Allen Edmonds. Last earnings season, and said that they are going to issue a profit warning. So Microsoft is going to issue a profit warning due to currency exchange rates. And I think this is going to continue to impact big US multinational companies that do significant business overseas. And we talked about why. So if you're earning money in foreign currency, when you go to exchange that back to US dollars, you know, you're going to be able to buy less US dollars with your foreign currency, right? So if we think about, I think the most notable currency pair right now that everybody on the street is talking about is the Japanese yen US dollar, right? The Japanese yen is quite literally falling off a cliff. And there's a lot of reasons why, but I think the biggest reason is that the Federal Reserve here in the United States is going out on a limb, being really strong with raising interest rates. We've heard similar verbiage come out of the European central banks and other central banks around the world, but the Japanese, or the Bank of Japan, have pretty much taken the exact opposite approach and have held steadfast with their, let's just say, egregious monetary policy on the front of negative interest rates and printing a bunch of money. So I think the market has had it, and I think everybody's dumping a lot of their Japanese currency. Hey, Ren 1018 says, love the weather right before it rains in New York City. Yeah, Ren 1018, it's, let's just say it's crazy humid tonight. I almost feel like I'm in Miami tonight. It's that humid out. Hey, Arturo Flores is tomorrow's CPI at 9.2. Okay, so you think it's going to come in at 9.2? It's pretty high. I mean, I think consensus is for about an 8.8% reading. So we'll see. I mean, we'll see. You know, there was a whisper number today. I'm not sure if anybody saw that. There was a whisper number for like a 10.2 reading. But CNBC has since come out and debunked that and said that's all fake news. So I wouldn't be, you know, I think I'm just going to wait until the numbers come out to really, you know, make any moves or really do anything. I very seldom trade off of that. Very seldom trade off of that type of information, but you know, I wouldn't be surprised to see the CPI come in actually a little bit lighter, because as you guys know, we've been talking about on the stream for probably about a couple weeks now that a lot of the commodities prices are starting to roll over here. So we talked about copper. The price of copper is rolling over and coming down finally. Lumber has absolutely fallen off a cliff. And so is crude oil. I mean, I think we hit a high on ticker symbol CL of about 130 back in March. We are now had a solid close today, I think below $95, which is good news for people that are driving, because that is going to trickle down into the price of gas at the pump. Thara Soups is, what about palladium? You know, so I have a good friend who is like precious metals nut job, I call him. He is obsessed with collecting and hoarding platinum, palladium, physical silver, physical gold. I don't really hold any of that stuff. You know, I do have a very, very small collection of physical silver, but nothing to even quantify or measure it to a net worth or anything. But very, very small position in physical silver. You know, we were covering, I think, about 3 behind the street newsletters ago that if gold cracked to all-time record highs, I would put on a pretty sizable position in gold. But we've actually done the exact opposite. And that's why I always wait for confirmation on those type of big macro trades like that, because gold has actually gone the opposite way and rolled over. I think we're down about 20% from recent highs in gold. But right now, this is directly under the 432 Park Avenue building. I think it's one of the most unique buildings in the city, to be honest. Hey, Christian Wilson is here, says I just got the new spark plugs for my F-150, love that. Good to see you. Dallas is here, says hey Tom, good evening, how has your day been? My day's been good. I had a couple meetings and then I went out to Long Island, New York. So I was out on Long Island for about 2 hours, Travid says, hey Tom, what are you thinking about the US dollar spending by the US government? Is government spending the money for the public in a right way or not? Well, absolutely not. Absolutely not. You know, and we talked about this before. You know, a lot of times, I think I titled the stream, It's Not All Jerome Powell's Fault. I think that was the title of the stream. And the reason why I said that is because if you turn on CNBC, Fox Business, or CNN Business, even Bloomberg, you're going to see an extremely, I guess, one-sided narrative here, where everybody is blaming inflation. I guess we'll walk downtown and then we'll cross over maybe. I think you're going to see an extremely, extremely one-sided narrative about how Fed Chair Jerome Powell is creating all this inflation, which I do agree, right? But you know, that's only on the monetary side of the house, right? There's two to tango. It takes two to tango. And I think that the fiscal side of the house, which is government spending and government policy, has been just as egregious as the monetary side of the house. So we can't blame everything on Fed Chair Jerome Powell. You know, he has a lot on his plate. He's also getting influenced, I believe, by both presidents. You know, I think he was strongly influenced by President Donald Trump, and I think he was also strongly influenced this time around with now President Joe Biden. Even though they're supposed to be private, separate entities, I think it's pretty obvious, and I think everybody could pretty much agree that presidents do in some way, shape, or form affect the monetary policy. If you guys remember, Donald Trump was actually threatening to fire Fed Chair Jerome Powell when he wanted to raise interest rates. Now, why do we think he may wanted to do that? And let's not get political. We're just sort of stating the facts here. I don't want to argue Democrat or Republican. Quite frankly, I don't care. But there was a time where Donald Trump threatened to fire Fed Chairman Jerome Powell because he was hinting at the probability or the possibility of raising interest rates. Now, why do you think Donald Trump may have thrown a fit when Fed Chairman Jerome Powell said, yeah, maybe we'll start to raise some interest rates? Well, what happens to the high flyer tech companies and what happens to the economy when you raise interest rates? Well, those tech stocks tend to get killed. The stock market valuations tend to come down. and people get laid off, right? So Trump definitely didn't want that under his watch, but I think at some point, as inflation starts to ramp, as it's getting out of control right now, you gotta sacrifice the stock market in order to get inflation under control, because at the end of the day, if we really think about it, the vast majority of Americans do not own any assets. Okay, let's think about that for a second. So the vast majority of Americans do not own the lion's share of assets out there. So if you look at the data, the top 10% of Americans own about 90% of all the assets out there. That includes real estate, that includes equities, bonds, you name it. So if the stock market takes a hit, the average everyday person may not really feel it as much as a crazy runaway inflationary environment, right? So if you're a person, you're living paycheck to paycheck, you could just balance your budget and pay your bills. Well, what happens if now your grocery bill every month is $75 more? What happens if your gas bill or your electric bill is now $50 more per month? That is going to put an incredible hurt on the American people. So I think Fed Chairman Jerome Powell is doing the right thing by raising interest rates, trying to get inflation under control, because the average everyday American are the people who get hurt by inflation. It's not the 1% like you hear on Fox News and CNBC where they say, oh, inflation's actually going to hurt the 1%, and it's not true. It's fake news. Inflation hurts the most the average everyday working class person. So I'm actually in favor for some short-term pain in the stock market if that means we get inflation under control. But that's just my opinion. Hey, RJ is here. Welcome, RJ. Good to see you. Mark Francis 076 says, I'm in a poor country, boy with very few assets. Nirvana Fan 500 says, I live in the forest and hunt to survive. Dutchman says, our 401k and IRAs have taken a beating since January, says Dutchman. Roy S, thank you so much. Roy S says, don't forget to hit the like button. Yeah, thank you guys for hitting the like button. Appreciate it. Jeremiah says, hey Tom from Argentina, love New York. Hopefully you can come to New York very soon. Freetro says, with so much government benefits, deflation ain't so bad. Funny. Hey, NYC Cherry Groove, the one and only. Good to see you, Cherry Groove. Long time no see. Hopefully you're having a good summer so far. Cherry Groove is one of our first viewers for the channel and one of our first moderators. So thank you, NYC Cherry Groove. Hopefully you're having a fantastic summer, my friend. Jamie Massetti says, how much do you think interest rates will go up? Well, I think that the Federal Reserve's target is about 3%. So I think it's really dependent on the CPI number. I think it's really dependent on the CPI print. Hey, Dallas says, hey Tom, love the streams, keep up the great work. Thank you so much for the $2 donation, very much appreciate it. Thank you so much, Dallas. But to answer your question, here's what I'll say. And it's sort of like the good news is bad news and the bad news is good news. And here's what I mean. Let me explain that a little bit, and again, this is very opinionated. It's not, may not be factual. It's my opinion. But I think we're in an environment of good news is bad news and bad news is good news. So last week we got the jobs numbers that absolutely blew it out of the water. That's good news. Why is that good news? Because, I mean, unless you're a sociopath, you want to see people getting jobs, getting hired, making money, right? I think the average person on the chat, I think everybody could agree here unanimously, as more people enter the labor force and get jobs, well, that's a good thing, right? People are working. We're happy about that. I think we could all agree on that. Doesn't matter what side of the aisle we're on. We want to see people working. We want to see companies doing successful and hiring employees. So here's the bad news. So that's good news, but the bad news is Fed Chairman Jerome Powell and the Federal Reserve is going to see those numbers and say, oh my God, this is a problem. we raised interest rates 75 basis points and the labor market is still white hot. Now, why is that bad? Because that adds to inflationary pressures. If you looked at the hourly wages, I think hourly wages year over year were up about 8%. That also adds to inflationary pressures as well. So the good news is people are getting jobs, companies are still hiring, the labor market is still strong. You know, I think the statistic out there is that there's more people, or there's more jobs available in the United States than there are people looking for work. So if that's the case, Fed Chair Jerome Powell is going to look at that data and say, okay, the economy is still white hot, people are still having jobs, we need to start to tighten the economy a little bit further by letting additional assets roll off the balance sheet, by selling mortgage-backed securities, by selling US Treasuries, and yes, raising that federal funds rate. So in conclusion, what I'll say is, to answer your question, how high do you think interest rates are going to go? You know, I think if the CPI number comes in hotter than expected, the Fed is going to go gangbusters with raising these interest rates. But if we start to see that headline CPI number follow the trajectory of the core CPI number, the one that has already started to roll over here, well, I think the Federal Reserve may chill out a little bit. But again, that's just my speculation. I'm not saying that's going to happen 100%, but if I was Fed Chair Jerome Powell, that's how I would be thinking. So, what do you guys think? What do you guys think? Hey, MTR is here. What's up? MTR is here. Says put your money under your mattress. Hey, Adam says the housing market is still booming in Los Angeles. Wow. Steph says, Tom, I'm a Democrat, but does have a president who can't speak a coherent sentence hurt the market? I think that's a good question, and I think I'm going to give you an answer that you may not expect. I really, truly believe that presidents have very little impact on where the stock market goes. So, you know, under President Donald Trump, the stock market went to Mars, but it's not necessarily because of Donald Trump, right? During the 2008 financial crisis, when we started to come out of that recession, the stock market returns under President Barack Obama were fantastic, phenomenal. But it doesn't necessarily mean that it's because of President Barack Obama. The stock market's not doing too hot right now, but in my opinion, and you guys know me, I don't try to hide this, I'm not a big fan of Joe Biden, but I don't think that the stock market is doing bad because of Joe Biden. I really don't think there's a correlation there. I don't think you have enough concrete evidence to say that there's that correlation. We do have enough concrete evidence to say that there's a massive correlation between monetary policy and stock market returns. You know, I want everybody to do this. Pull up, if you go to the Federal Reserve's website, if everybody can do this right now, go to the Federal Reserve's website and scroll over to the balance sheet. You could actually look at the balance sheet in real time. It's publicly available information. Nobody really looks at it. I look at it. I think you guys should look at it. Expand it out 10 years and look at the line on the Federal Reserve's balance sheet. It literally tracks the S&P 500 and the NASDAQ. Quite literally. There's about a 90% correlation in the growth of the Fed's balance sheet and the prices of equities. So here's what I would say. I think there's more of a correlation between who is the president of the Fed or the chairman of the Federal Reserve than who is in the White House. That's what I'll say. Again, I'm not saying, you know, that's a fact. I'm just saying that is my opinion based upon the data I've seen. I really don't think you can conclusively say right now that the stock market isn't doing well because of Joe Biden. And I don't think you can conclusively say that the stock market did really well due to Donald Trump. I think it's more monetary policy. Again, that is totally up for debate. Totally up for debate. But I think there's more weighting on that in my opinion. I'm not saying I'm right. I'm just saying in my opinion. Hey, Yogi is here. Good to see you, Yogi. Welcome. Sabrina Fair is joining us. MZ Really says, hey Tom, what's your opinion on raising the minimum wage to $18 in California? In California in this economy. Yeah, I mean, so I'll give you a little hint as to what I believe. I think that there should be no set minimum wage, but based upon the sort of economic environment that we have, I don't think no minimum wage would work because we print too much money and we have too much Federal Reserve involvement in the economy. So I think if you had true free market capitalism, I think no minimum wage would work best. But I actually believe we have more of a corporate socialism type system going on. David C. Randall says the stock market is more affected by the stability and change no matter who is the president. Yeah, so I mean, at the end of the day, above all, you know, equity prices will follow the trajectory of their earnings. Okay, so if you have decelerating earnings in the S&P 500, the S&P 500 is going to go down. Right, black and white, full stop. And that's why I always hammer you guys on the fact that you need to be paying attention to the ISM manufacturing numbers. So the reason why I say you have to pay attention to the ISM PMI numbers is because the manufacturing sector of the United States economy is roughly about 20% of GDP. So that's a pretty good leading indicator for the health of the economy. So if we can conclusively say, based upon the PMI numbers, that the manufacturing sector of the US economy is expanding, well, then we could probably say that those corporate profits will also be expanding. Thus, GDP, or gross domestic product, will expand. Thus, you know, market returns will be positive, right? Generally speaking, I'm not saying it's an exact science, but it's definitely a pretty good leading indicator. And one of the things that's been concerning me, you know, I wonder what they're shooting out here. It looks like some sort of a movie set here. So this is East 50th Street in Park. I wonder what they're filming. Huh. It says Lucy and Desi. Anyway, sorry guys. I have the attention span of like a rabbit. So anyway, what I was saying is, you know, if we can, one of the worrying trends, okay, I'll say this is a worrying trend that I'm seeing, is even though the PMI numbers are coming in above 50, which means expansion, we're starting to see deceleration, or the PMI numbers starting to roll over. Okay, so 3 months ago, the PMI numbers, or the ISM manufacturing numbers, was about 58. Then it was about 56. Then I think we just had a 54 print. So that means even though we're seeing growth, we're seeing slowing growth and deceleration. And that's also why I think you're seeing the trajectory of asset prices in the S&P 500 also roll over here. On the contrary, you're actually seeing a little bit of a divergence here. You're seeing the Chinese CPI numbers actually expand. You know, go from, I think, about 48 to about 57. So you're seeing the exact opposite. And I think the reason why you're seeing that is because China has been in this unbelievable, ridiculous zero COVID policy. So I think they had a little bit slower of a time to recover than the United States did. I think the United States sort of has all that growth priced in. I think China is just starting to get going as they come out of those COVID lockdowns from the zero COVID policy. Hey, Kevin D says, looks like another great evening. Any great boutique hotels for a staycation? Any good boutique hotels? Well, I don't know how much you're looking to spend, but I would recommend the Essex House. It's a very nice 5-star hotel here in New York City. Mr. Reilly says, thanks for your view. The debate is on for $18 according to the news. Well, again, hey, look, you know, here's what I'll say. It's never what you deserve, it's what you can negotiate. Okay, I'll say that again for everybody. It's never, so if you're negotiating your salary or something like that, never think about, oh, do I deserve this? Think about, what can I negotiate? That's just the reality. So hey, if they can negotiate $18 an hour, more power to them. If you can negotiate $100 an hour, take it, right? So it's not what you deserve, it's what you can negotiate. So hey, James is here. Good to see you, James. It looks like a nice night. Always appreciate you joining the streams, James. Bagels and Walks. This is Kevin D. I recommend the Redbury Hotel. Very nice. 5 CEOs says, hello from Tampa, Florida. Can't wait to be in New York City with the family this October. Wow. Yeah, so October is, I'd say, one of the top 2 times to visit New York because all the leaves are changing. You're going to see beautiful foliage in Central Park. So love Tampa, Florida. I'll actually be in Miami next week. So love Southern Florida, and I'm looking forward to you coming to New York. Let me check out some of the comments. Dan Zhang is here. Says, hey Tom, what are your thoughts on dollar almost equivalent to the euro? Yeah, so we are now on parity, I believe, for the first time in 20 years. And Dan, I'm not sure if you're just joining, but earlier this morning, I saw a big headline come across CNBC from CEO of ServiceNow, Bill McDermott. And one of the things that Bill McDermott said is, he's like, look, here at ServiceNow, we have to issue a profit warning because the currency crisis across the globe and the strength in the US dollar is really putting a big dent on the bottom line. And we talked about this with Microsoft too. So it's interesting that today ServiceNow's CEO Bill McDermott comes out and says the exact same thing. Anytime you have a big multinational company who sells a lot of products and services overseas, anytime you go to convert that native currency or foreign currency back into your native currency, US dollar, obviously during times of US dollar strength, it's going to take a lot more yen to buy $1, right? So I think you're seeing US dollar strength because everybody is really, really scared out there. I think you're seeing a lot of US dollar strength due to monetary policy improving. And the reason why I say improving is because I think Fed Chairman Jerome Powell needs to raise interest rates. But it's interesting that how we were talking about the same exact thing yesterday. And now it's coming to fruition. First we had Microsoft issuing that profit warning due to currency exchange, and now we're seeing ServiceNow, which is a great enterprise software company, saying the same exact thing. Hey JM's, Tom, do you think they cut rates and implement QE again next year? I think that's going to all depend on inflation, JM. I really think that's all going to depend on inflation, to be quite honest. We were talking about that potential scenario where, okay, first and foremost, obviously this is a midterm election cycle. And historically speaking, anytime we are in a midterm election cycle, stocks are always, pretty much always negative. I would say negative to flat. So knowing that, and I think the biggest reason why stocks tend to not do well in midterm election cycles is because there's a lot of uncertainty. There's a very big possibility that Republicans will control both houses of Congress. So I think a lot of asset managers, a lot of portfolio managers, also a lot of companies are just sort of playing a waiting game here to see how that political environment is going to turn out. And if you look at the data, usually the tail end of the 3rd year of somebody's presidency and the 4th year of somebody's presidency is where you have fantastic stock market returns, like really, really good returns. And I think that's because everything is settled in, midterms are gone, there's no sort of, fear in the market about new corporate taxes, anything like that. And, we talked about this. There is a potential, there is a big possibility here where we can have the best situation ever ever for the stock market, and I'll tell you what it is. And again, try not to get political. I know everybody's on the edge of your seat, but here's what the data shows. The data shows this. The stock market performs the best when you have, number one, a Democrat as the president. Okay, so sorry for all the Republicans out there, but that's the truth. And number two, when the Republicans control both houses of Congress. Okay, I'll say that one more time. The stock market performance is the best when you have a Democrat as a president and the Republicans control both houses of Congress. So during this midterm election cycle, we can absolutely see that happen. You know, we could see the Republicans take both houses of Congress, and we have Joe Biden, President Joe Biden in office, and he is a Democrat. And historically speaking, that has been when the stock market has performed the best. Again, not to get political. I don't care if you're a Biden supporter. I don't care if you're a Republican. On this channel, we just report the data in relation to the financial markets. But it is a big possibility. We could be setting ourselves up for potentially the best environment politically for the market. Hey, War Walker, good to see you. War Walker is joining us from the one and only Miami, Florida. So if you guys are enjoying the stream, if you are enjoying the beautiful sights, sounds, and views of New York City, feel free to press the like button on the video and subscribe to the channel if you are new. We do go live about 5 days a week between New York City and Miami, and we talk about the financial markets. So if you'd like to be a part of that, feel free to click the subscribe button and join us here. Hey, War Walker, this is Tom, the 305 misses you. You know, I'm going to be back tomorrow, War Walker. I'm going to be back for about a week in Miami, so I'll see you down there, my friend. Nicholas Duras says, why the heck is the Rockefeller ice skating rink open? Isn't that only in the winter? Yeah, so it's actually not an ice skating rink. I'm going to show you what it is, Nicholas. It's actually, you know, maybe we'll go in this tonight. So this is actually a roller skating rink. So it's really, really unique. So during the winter, obviously you have the very famous ice skating. But during the summer for this year, I think there's a citywide disco theme in New York. And there is a roller skating rink. I'll show you. Yeah, James says it looks windy. It is a little bit windy here tonight, James. Yeah, Bagels and Walks is the Central Park is also disco themed. You are right. Hey, Jail, what's up? Says, hey, Tom, they're playing good skating music. Good to see it. Hey, the Antagonizer's here. What's up, Antagonizer? Always a pleasure. 21 Jump Street says, hello from Barbados. Miss Brown Eyes, welcome. Good to see you. Welcome to the show tonight. You know, it is an extremely windy night here in Manhattan. We are on thunderstorm watch. So hopefully the rain holds up. Hey, Cynthia Martinez, welcome. Cynthia Martinez is also joining us from the 305 Miami. Good to see you. So this is like a structure here where you could actually stand inside. Very unique. But for those of you who are just joining, we were talking about how tomorrow, Wednesday the 13th, the Bureau of Labor Statistics will be releasing the CPI numbers. So many economists on Wall Street are forecasting an 8.8% increase year over year compared to an 8.6% increase in May. Now here's the only problem. That is a 40-year inflationary high. You know, I think we may go inside. So we'll stand inside here. Hopefully this will help us cool off that CPI number tomorrow. Hey, Muhammad is here. Good to see you. XOXX Bob. Lupe is here. Says jumping in the fountain tonight. We will. SME Media says the fountain is where the Christmas tree is usually placed. Yeah, that's right. So they place the Christmas tree right here. Oof. Hey, Christy F, good to see you. All right. You know, we didn't get too wet. I got a little bit wet, but I think it was worth it. SME Media's like, did you get wet? A little bit, a little teeny bit. Not too bad though, not too bad, team. Yeah, Frito says those divestment campaigns from fossil fuels backfired. Yeah, they backfired pretty hard, you're right. You know, another thing that I wanted to talk about, you know, we're seeing a record level of single family home deals fall through. So I think this quarter was the biggest quarter where deals or purchases of single family homes fell through. That's probably because of increased financing costs. So who knows, maybe we'll start to see a little bit of an uptick in inventory coming on the market here finally. Hey, Van is here. Good to see you, Van. Welcome. Yeah, Yogi says single families came to the realization that they cannot afford actual homes. $5,000 for a mortgage every month. Yeah, that's insanity. Hey, Lady O is here. Good to see you, Lady O. Lady O is our moderator from New Jersey. Always good to see you. Well, I think the good news in terms of interest rates, I think you're going to start to see that that 30-year mortgage rate come down a little bit. And the reason why I say that is because if you look at that 10-year U.S. Treasury yield, we're actually now trading below 3%. So if you guys remember correctly, I think we hit the high, I think it was about 3.5 or 3.5%. So the yield on that 10-year U.S. Treasury is now back below 3%. So that will probably spill over into the mortgage market, putting some pressure on yields there. So we'll see. You 2 weeks ago there was an uncontrolled sell-off in the debt market where yields were spiking, and that is definitely not good to see. So long as there's stability in the debt market, you should have stability in the stock market. I always like to say that if you want to know where the stock market's going to go, you got to watch the debt market. Hey, MBA Elias, good to see you. Western Mass Dave, what's up? This is Tommy playing in the water again. Yeah, we are. Indeed, we are. All right, let's head down to Bryant Park. We'll make a right on 5th Avenue. So we're just leaving Rockefeller Center now. Let's make a right on West 49th Street. Hey, Austin City Limits, the stock market futures are at par tonight. Yeah, I think tomorrow is going to be an extremely volatile day on Wall Street. Obviously, everybody is anticipating that CPI number, that huge inflation print, because, if we get a hotter number than expected, if we get a really hot CPI number, that means the Federal Reserve is going to go gangbusters on the rate hikes. But if we get a CPI number that comes in a little bit less than expected, that could set us up for the second half of the year. But we'll have to see. Oh, I think this is a bus from Canada, perhaps. Hey, MBA Elias, it's good to see you on the stream, Tom. Sorry I've been away from the chat. Yeah, no problem, MBA Elias. Always a pleasure to have you here as well. We didn't really cover too much. We covered Q2 earnings. Obviously, this is the official start of Q2 earnings. And as we've been hearing from many CEOs within the S&P 500, number one, inflation is going to put a big pressure on the bottom line, but also the currency environment, right? So if you look at a lot of emerging market currencies, they're falling off a cliff. So if you're a multinational company in the United States selling products and services in other countries, you're probably going to take a material hit to the bottom line. Now, CEO of ServiceNow, which we talked about a couple times tonight on the stream, they did come out this morning, I think early this morning, with a profit warning, saying that it's not only exclusive to ServiceNow, but you're going to see this across the entire suite of enterprise software companies that have significant business in Europe and overseas because of those currency exchange rates. Microsoft said the same thing. So the only thing that I'm really worried about this earnings season is not technically the earnings misses, but it is the forward guidance from many of these CEOs. If we have the C-suite across the board come out and revise their earnings estimates lower, well, that means the overall estimates of the S&P 500's earnings are going to go down as well, which means the price of the overall market should go down in tandem with the earnings revisions. So we'll pay close attention to that. A significant bright spot, surprisingly, may be the airlines. I think the only question there to be asked is, do we think that the increase in airline fares is enough to offset the increase in energy and fuel costs for these airlines? No, I don't know. I think it's possible, but
It should be interesting to hear from Delta Airlines as they report earnings this week. We will be covering that right here on the stream. But tomorrow, just remember everybody, tomorrow there will be no live stream. I do have to travel for business tomorrow, so we will not be live. But we should be live once again on Thursday. James says, once inflation gets rolling, very hard to stop. Yeah, I mean, James, well, to be fair, right? To be fair, if you look at the core CPI number, which is obviously not the headline, but if you look at the core CPI number, we're actually starting to see that number roll over. So we've been seeing slight deceleration in the core CPI. But in that headline CPI number, you're right, because that is the one that includes volatile food and energy. But just look at crude oil, ticker symbol CL's trading, at $95 a barrel. So very possible to see a little bit of deceleration in the CPI numbers tomorrow. It's possible. There was a whisper number that came out over the air today of a 10% reading, but that was debunked by CNBC for fake news. So now we're on 6th Avenue and West 49th Street. We are overlooking the UBS building, which is a big investment bank here. I think this is one of my favorite spots in the city. Hey, Joe C is here, says rent inflation. I agree. That does seem to be a huge problem. I think for a lot of the rent stabilized buildings in New York City, they just approved, I think, about a 3% rent increase for a lot of the rent stabilized buildings in New York. Two harbors. No worries, my friend. No worries. Hey, Yaved says good evening. Welcome. Good to see you. Joan says the stream is looking strong tonight. Thank you, Joan, for joining. If you look across the street here, you'll see Adele's Famous, which I believe is one of the best halal spots in the city. So for halal food, unfortunately, look at how long that line is. It's insane. Usually I say if the line ever extends past the third flagpole, it's probably about a 2-hour wait. And it's looking exactly like that tonight. Mike C, I'm not sure. I really don't know if rent control is illegal in Florida. I really have no idea. Basketball It Up says, hey Tom, do you think that New York City rental prices will go down in price, or New York City apartments will go down in price? I think over time, the trajectory is higher. But if you're, forecasting maybe a year in advance, I think, maybe the market will cool off a little bit. Now, it doesn't necessarily, I think here's the interesting thing. I think anytime people talk about real estate, specifically on the internet, you get the best of both extremes, is what I like to call it. This is how I sort of describe it to my friends. Anytime you're looking for answers to financial questions online, I think especially in relation to real estate, you're going to find two things and two things only. Number one, you're going to have the group that says prices are never going to go down, they're going to continue to go up, and it's going to be a gangbusters real estate market forever. And then on the other hand, you have the unbelievable gloom and doomers that think anytime the real estate market has a downturn, it's going to be just like 2008 all over again. There's never anybody in the middle, and I think that's due to copywriting. Obviously people want to get clicks on their articles and their videos and things like that. And I think you guys will notice that if you do a Google search or you go on YouTube and you type in, housing market, every single video is going to be like the housing crash, the housing boom. And I think it's just people to generate, clicks and pandemonium, which I get, I understand, but the real estate market doesn't necessarily need to totally crash and go bankrupt every time we have a downturn in the economy. I think people are so ingrained in their mind to think it's just one way or another or that we're going to have another 2008. You know, it's very possible that we had this unbelievable euphoric boom in the housing market, and the only thing that happens is we just have sort of like a mean reversion where prices will revert to the mean, or prices won't necessarily go down. They'll just stagnate and maybe go down like a percentage point and not grow as fast. So I always think that's very interesting, and I think that that's due to just the way people search for information. I think anytime you look for answers or questions about, you know, the real estate market online, you're always going to get the best of both extremes, in my opinion. Hey, Two Hots is Walks from Wall Street. Hi, great video. Thank you so much for the compliments. I appreciate it. Lady O, good to see you. SME Media says, my real estate agent says housing markets are hyper local. Yes. You know, I think you're going to see some very, very select few markets that were really, really white hot. Probably decline in price, maybe like Austin, Texas, maybe Miami. But I don't think we can conclusively say that we're going to get a full-on crash. I don't think that we have the data to do that. And I think we've talked about this many times. But first, we are right outside of the News Corporation building. So News Corp is home to Fox News, the Wall Street Journal, and now Investors Business Daily, which is a William J. O'Neill company. I believe they acquired Investors Business Daily for about $250 million. Fantastic newspaper, fantastic company over there at IBD. You should check them out. But going back to the real estate market, I don't think you have conclusive data just yet to say that you could potentially have something along the lines of 2008. Obviously, number one reason why I think that is because the underwriting practices since 2008, since the financial crisis, have improved materially, like really, really good underwriting practices. If you remember back to the 2008 financial crisis, or I should say leading up to the financial crisis, the thing that caused the financial crisis are broke people buying homes, right? And just to put it very blunt, people who weren't well capitalized buying homes with adjustable rate mortgages or ADRs. And the reason for that is because when the Federal Reserve raises interest rates, the interest rates on your mortgage will also go up if you have an adjustable rate. So if you were planning on paying $1,200 a month for your mortgage payment, and you really, you know, as interest rates go up, then you have a balloon payment to $2,000 a month, well, what happens is you have a wave of defaults all at the same time. And when you have everybody defaulting on their mortgages at the same time, what happens? You have a huge, huge glut of foreclosures coming onto the market all at once, thus increasing the supply drastically, which in turn brings down prices. I do not think we'll see that this time around, in my view. Mike C says there would have to be a huge correction for even half of all mortgages to be underwater. Yeah, and I mean, and look, even if mortgages are underwater, right, which is a horrible, horrible thing, you know, I understand that people will say, okay, I'm not going to continue to pay on a mortgage that I owe more money than what the house is worth, so that sometimes they just walk away from the deal. I get that, but I think in my opinion, I think the biggest thing, if you're expecting another 2008, you're going to have to see a wave of foreclosures. And, you know, the data shows the underwriting standards are pretty high. You know, I think last year in 2021 was the strongest year for all cash buys in the housing market. So it's pretty hard to default on a mortgage if you don't have one, right? If you're buying these properties in all cash. You know, we could have some normalization in the foreclosures, but I don't know. Andy S. says the pound has been weak against the dollar since 2016. Jonathan Francis says upside down mortgage. Sally says I don't like summer at all. MBA Elias says the Fed could start to lower rates next year. Buyers will be back into the market. Yeah, that's true. That is true. MBA Elias, did you see that piece of data from the housing market that just came out that said, I think this quarter was the biggest quarter for people walking away from single family deals. Now, if anybody could Google that quickly, I don't remember the exact statistic, but a lot of people are starting to walk away, or a lot of these deals are falling through. Obviously, probably because of financing is getting a lot more expensive. But then again, like we talked about earlier in the stream, that 10-year U.S. Treasury yield is now below 3% once again. So, Jonathan France says, are corporations still heavy on cash? Yeah, that's another thing, right? So if you look at, the top companies, let's say the top 20 companies in the S&P 500, they have extreme amounts of liquidity, right? Apple has more cash on their balance sheet than the GDP of most countries on earth, right? So where I do see a problem though, is in a lot of these Russell 2000 companies, right? Because as we talk about in the Russell 2000, a lot of these companies don't produce any cash flow at all, have negative earnings, don't earn any money. And as interest rates go up, it's going to be increasingly more difficult for those corporations to service their existing or outstanding debt obligations. Finance is all about the cost of capital, right? So if you are a company in hyper growth phase, it's sort of growth at all costs in terms of top line revenue. And if I can borrow money at pretty much at 0%, then why not I just take on so much debt, because it's going to be easy to service, and I could use that debt to hire new employees, hire a larger sales force, thus growing top line revenue even more. But when the tide changes, right, it's sort of the thing when Warren Buffett says, when the tide goes out, you see who's swimming naked. It's sort of the same concept. When the Federal Reserve starts to raise interest rates, the cost of capital gets high, and these money-losing companies, will have to start laying off employees, cutting costs, and the cycle goes on. Lemonade, welcome. So check out this beautiful view of the Empire State Building here. We are standing on the corner of West 42nd Street and Avenue of the Americas, right outside of the Bank of America Tower. And the Empire State Building is lit up in the classic white color for tonight. Sally is here. Welcome, Sally. Good to see you. Cindy Foley is here. Roy S., welcome. XOXX Bob says, Uber will never fail. They are slave company. This is Bob. Juan Paulo says, good evening. I'm speaking from Brazil. Welcome to all of our Brazilian viewers. Hopefully you're doing well. Yeah, Western Mass Dave is like a night without the Empire State Building is an incomplete night. I would agree 100%. Hey, NMB 045 says you're near Bryant Park. NMB 045, when are you coming back to New York City? I think you were just here last month. Hopefully you'll be able to make another trip back to New York before the summer is over, my friend. Yeah, Paul says, hey Tom, it took 14 months to build the Empire State Building. Unbelievable. So the Empire State Building was built during the Great Depression, and I think it's still arguably one of the most iconic buildings in the entire world. Unbelievable building. Hey, Lupe says, hey Tom, I'll be back in New York in August. Love that. So here we are outside of the Bank of America Tower. It looks like we have some interns here, staying late at the office. Hey, JP is here. Welcome, JP. Hopefully you're well. So we're standing outside of Salesforce Tower. We're going to hear from Salesforce, big enterprise software company this earnings season. The CEO is Mark Benioff. And Salesforce is known for their customer relationship management software, but also they are branching out into many different businesses, not only in CRM tools, but also in workforce collaboration tools as well. Most notably with their expansion into their acquisition of Slack. So ticker symbol WORK, formerly publicly traded company Slack, was acquired by Mark Benioff and his team over there at Salesforce. You know, I think one of the things I like about Salesforce the most, so as you guys know, I am in enterprise tech sales or enterprise software sales, whatever you want to call it. And I've used Salesforce in my previous job. And I think the number one thing I like about Salesforce is the ease of integration with other software tools. So for example, as a salesperson, you know, not only would I log all of my activity in my CRM, which was Salesforce, but I could also do funnel management and lead management with ZoomInfo. So if anybody knows the software company ZoomInfo, ticker symbol ZI, CEO is Henry Schuck. I believe the company was previously called Discover.org, in which case they had a bunch of venture capital injection. I think from, I don't want to say the name because I actually am not too sure, but ZoomInfo, for anybody who is in sales, lead generation, or affects revenue directly, you've probably used ZoomInfo before. It integrates flawlessly with Salesforce. And back in the day, I also used to use Slack as well. So I think just the API integration with Salesforce is fantastic. Hey JK, this is Tom. Your live streaming is very entertaining yet extremely informative, which I never thought would be possible. Hey JK, thank you for saying that. It means a lot that you tune into the show. I appreciate talking to you each night. Dusty Cole says, hey Tom, Slack just seems like smart social communication networking in work. Yeah, so Slack, you could think about Slack as like a competitor with Microsoft Teams. If anybody uses Microsoft Teams, you know, although Google Meets, I think, and Google, like the G Suite, is trying to break into that sort of competitive market with Slack and Microsoft Teams. Now, here's the big thing that I've always sort of debated with my friends. Let's say if you have, you know, Office 365 or Microsoft MS 365, something like that, you use it for your email and things like that. I believe Teams comes for free. Right, so it sort of comes down to, you know, if you're already a Microsoft user for their Office products, you know, you're already going to get Teams for free. So why do you need to go out and buy like a Slack, right? So this is sort of in the software space or in the software industry for anybody who works in tech. This is what's called a nice to have product versus a must have. And I think that those additional add-ons are technically nice to have products. So I don't know, if I was running an Office suite and I get Microsoft Teams for free, you know, would I then go out and purchase and take on additional, you know, expenditure for the business? Would I go and purchase Slack? Probably not. I don't know. I think it's a growing debate, but in my opinion, I think Microsoft Teams is just fine. But I guess I'll turn it back to the chat, because a lot of people here work in finance and in tech and in many different industries. Many of you are lawyers, teachers. So what do you guys prefer? Do you guys prefer Microsoft Teams? Do you prefer Slack? Or what other sort of collaboration tools do you use at your company? Yeah, James says nobody on the grass. I think the lawn is closed tonight, James. Dusty Coles is right, I get that. Not too familiar with Teams, but Slack seems smart. SME Media uses Slack. JP says Slack 100%. Interesting. Okay, so we have a lot of Slack users here. James says we use Slack and it works great. JP says Microsoft Teams makes me, oh my God, makes you want to kill yourself. You know, I've given a lot of product demos over Microsoft Teams and I think they've gone pretty well. Okay, so here's the one I hate the most. Okay, I'm gonna reveal my least favorite communications tool here, which I absolutely cringe whenever I get a meeting maker, from Cisco WebEx. I mean, If you want to book a meeting with me and then you're like, and I agree to it, and you send me a Cisco WebEx link, not going to be too happy about it. Not going to be too happy about it at all. Is there any Cisco WebEx users here? So this is Bryant Park Grill. You know, I've never eaten here. I think I may have been here once for like a holiday party, but I definitely want to try to eat here one time. NMB045 says, I have no virtual team meetings whatsoever. My accounting job requires me in my own bubble. Well, that's nice. NMB045, that's really nice. Elliott Wave Review is here, says it's a full moon tonight, my friend. Zoom in on the moon and you'll get the money shot. We'll have to do that right now. I'll walk to the other side of the park. Sabrina Fair says, Tom, I love Microsoft Teams. I like Teams as well. JL says, Tom, I hope you don't mind if I take screenshots, then post them on IG for people to see. JL, I would be offended if you didn't take screenshots of the stream. Please feel free to do whatever you want. SME Media says, I've used Cisco WebEx. I think the federal government may use it. Yeah. So a lot of people in telecom, for whatever reason, use Cisco WebEx. Lemonade says, Tom, we tried WebEx, is more trouble than it's worth. Agreed. You know, I think Verizon made an acquisition of Blue Jeans. Is anybody familiar with that? Maybe we have some Verizon employees on the network side. But Blue Jeans is sort of like that video conferencing, web conferencing software. That one's also pretty horrible as well. Blue Jeans, in my opinion. Hey, Sam64 is here. It says, hey Tom, got a new follower from Algeria. Wow, love that. I love New York, was there 2 weeks ago. Hey, Algeria's a fantastic place. Thank you so much for joining. Welcome to all of our new viewers from Algeria. Welcome, welcome to the stream, and thank you for joining. We appreciate it, and hopefully you come back to additional live streams. NBA Allies. This is the feds use WebEx. Yeah, well, Cisco probably does a ton of business with the federal government, so maybe they just, it's sort of like the land and expand. You know, Algeria, I think I was first introduced to Algeria, I think this was during the 2010 World Cup. Now, I'm not sure if there's any big soccer fans in the chat, but I think that was arguably one of the greatest soccer games. Maybe I'm a little biased. Anyway, I think it was arguably one of the greatest soccer games in history. I think it was the United States national team versus Algeria. Fantastic game. And I think that was the 2010 World Cup in Africa, the South Africa World Cup. Amazing, amazing game. Sometimes I go back and just watch the highlights. Traved says, Walks from Wall Street, Tom. What you think about the firing attacks in USA? After Joe Biden became president, these attacks are increasing continuously, like every second. The firing attacks? I'm not sure what you mean. Daniel G says, Tom, I'm watching the stream at the TV and chat on the laptop, and then I got confused and was posting a reply on another live stream from New York City. That's hilarious. Daniel G, good to see you though. You know, the park is closing. I got to figure out a way to get out of here. I'm looking at all this stuff. It seems to be closed down. So here is a beautiful view overlooking the lawn here at Bryant Park. You will see the one and only Stephen Schwarzman Building, New York Public Library, and the One Vanderbilt Building. Yeah, walking Minnesota. This is the Landon Donovan goal that day. It was fantastic. Hey, Katie Corns is South Florida in the house. You know, I'll be back in South Florida tomorrow, so I'll see you there. Photos from around New York, the one and only. Good to see you. Welcome. Paul says, Everton fan here. We just stayed in the Premier League. Paul, good to see you. Love Everton. You know, I think Landon Donovan had a little bit of a small stint at Everton, if I'm not mistaken. Katie says, where so in Florida? So Miami. right there in Miami, Florida. In which case we also do live streams from Miami, Florida. We usually split our time about 50-50, New York City, Miami. You know, I think my two favorite places on earth, number one, New York City. I may be a little bit biased with that answer. And number two, Miami, Florida. I love Miami. I love the energy of the city. And I think when I work in Miami, I feel like I'm building it because, you know, a big startup culture is happening in Miami, big tech boom there. So it's good to be a part of it. And also it feels like I'm right at home because there's definitely a lot of New Yorkers in Miami, West Palm Beach, Fort Lauderdale, and the like. Hey, Daniel Bacchus is watching the 2010 World Cup in Israel, Egypt, Turkey, Greece was amazing. Wow, very cool. Love that. Yeah, Western Mass Dave says it's the best of both worlds. I agree. I agree, Western Mass Dave. All right, let's cross the street here. Let's head over to Broadway. And the reason why I want to head over to Broadway is because we will end the stream with a beautiful view of the Empire State Building, and hopefully we can catch some of this full moon too. So if you guys are enjoying the stream so far tonight, feel free to hit the like button on the video and subscribe to the channel if you are new. We usually do these live streams 5 days a week, starting at 8:30 Eastern Standard Time, talking about the financial markets and other things. Tonight, obviously, we covered the CPI numbers. The Consumer Price Index will be released tomorrow. So the markets will be on hand and foot waiting for that. Lemonade's this beautiful view of the street food. So tonight for dinner, I think I may go to Adele's Famous. That is my favorite halal food in the city by far. So maybe I'll stop by there on my way home. What do you guys think? Elliott Wave Reviews says people don't realize that 80% of Algeria is covered by the Sahara Desert. Most of the population lives near the sea. Wow, I did not know that at all. Hey, Melissa 2087 says it is 81 degrees in New York City. You know, it is unbelievably humid here, like insanity. I don't even think it gets this humid in Miami, but tonight, I mean, in all fairness, we were supposed to get a massive, massive thunderstorm, lightning storm here in New York City, so I think that's probably why it's a little bit humid here. Hey, Daniel G is here from Buenos Aires, Argentina, says I've read TSQ screens. We're posting NASA photos from deep space. They look amazing. Have you seen them? Yeah, so Daniel G, that was actually on the front page of the Wall Street Journal today. Those photos from deep outer space. I think they're going to be releasing more on Thursday too. So yeah, I've absolutely seen them and they look fantastic. They look unbelievable. Hey, Stephanie is here, says can't wait to visit Miami. Yeah, you got to visit. Okay, now we are on Broadway. So I think you guys will be able to see a little bit of Times Square tonight. You know, very seldom do we ever venture over to Times Square, but when we do, I always like to show you guys the ball that drops on New Year's. So if you see that little blue ball at the top left-hand corner of your screen, that is what they do drop on New Year's Eve. Hey, Dolly Girl Twins says, Tom, what's your take on New York City puts out PSA on what to do in the event of a nuclear attack and the China froze bank account controversy, affected clients, injured protest? Yeah, so I've been watching that. I don't even know what you're talking about the what to do in a nuclear attack. I don't think there's much we can do in a nuclear attack. You know, I used to kind of worry about, you know, what would I do in the event of, you know, a nuclear missile hitting Manhattan. But at the end of the day, I think you just have to accept that you're going to die, right? I mean, there's nothing you can do. It's a nuclear missile. You're probably not going to feel anything, and you're probably going to evaporate into the cement. So, I don't know. I really don't try to think about that too much. and just pray to God it doesn't happen. But I have been watching what has been going on here in China. There's been a lot of riots, but more so along that, I've been watching what's going on in Sri Lanka, which is extremely, extremely troubling and worrying. And I think that has to do with a lot of extreme debt crises that we've been seeing going on around the world. Melissa 2087 says, I know this is about New York City, but heading to Boston / Massachusetts in December, ever been any recommendations? Yeah, so I have to get to Boston pretty soon. My brother does live there, so I'm looking forward to visiting, but I don't really know anything about Boston. I've never been, so. But I hear it's a fantastic city. Also Chicago as well. But even though Chicago's a little bit dangerous there, but we'll have to see. We've been talking about this though. We know that all fiat currencies do have a trajectory to go to zero over time. It's not a matter of if, it's a matter of when. So a lot of the times on the stream, people can get a little bit confused because we always talk about how the US dollar is in hyperinflationary collapse. But if you look at the relative strength, right? So a lot of the times on the stream, I'll say the dollar is extremely, extremely strong. That is on a relative basis when comparing it against the strength of other currencies around the world, right? So if you look at it on a relative basis, a relative strength basis, the dollar is the king right now. So the Dixie or the DXY, I believe, is at, or I believe it blew past its highs from 2016. The Japanese yen has now, I think, hit all-time record lows to the US, to the US dollar. And I think the number one reason for that is because you're seeing a big, big divergence here between central banks around the world in how they carry out their monetary policy. So what I mean by that is the US Central Bank, which is the Federal Reserve, and the European Central Bank with Christine Lagarde and all of them, everybody is essentially raising interest rates and starting quantitative tightening. But the Bank of Japan is actually doing the polar opposite to that. So the Bank of Japan has came out and said, we're not going to follow the Federal Reserve, we're not going to follow the ECB. We are going to continue our easy and loose monetary policy with negative interest rates. So in Japan, they actually have negative interest rates, which is absolutely beyond me. And I think you're starting to see, hold on, we'll let the thing pass here. So anyway, and I think you're starting to see just now, portfolio managers and people across the world and the country. Probably not a good idea to come here. Start to dump the Japanese yen. Because as the money printing happens, the devaluation of the yen commences, and everybody tries to reach a flight to safety, which has surprisingly been the US dollar. Yeah, NBA Elias's years of getting crushed is finally catching up with Japan. Yeah, it's definitely extremely, extremely concerning. And NBA Elias, I know I already said this once before on the stream, but this earnings season is going to be critical. This earnings season is absolutely going to be critical because if we have massive misses on these earnings reports, the S&P 500 forward earnings projections are going to come down, and they're going to come down hard. And in addition to that, maybe we'll let this fire truck go by. But this is going to hurt a lot of US multinational companies. And it's already hurting a lot of the enterprise software companies that do a lot of business in Europe, that do a lot of business in Japan and Korea. Because when they go to convert those foreign currencies back into US dollars, they're going to get a lot less US dollars. Yeah, Palmetti's is like make a hole. You know, I never really noticed this, but from 43rd Street, you actually have a pretty nice view of the One Vanderbilt building here. You know, I always made the joke that the FDNY fire truck should have like a battering ram on them. So when people don't want to move out of the way, they can just plow right over them. Hey, 48 is here, so the fire truck sounds like a crying baby. You know, 48 is something that's funny. And a fire, the fire hydrant, they'll just break all your windows and run the hose right through your car. I've seen it happen a bunch of times here. I think I have about it, but it's true. Deborah is here. Good to see you, Deborah. Nirvana fan 500 says, imagine needing help and that's the sound you hear coming towards you. Well, that's if the help can actually get to you anyway, with all this traffic. So the good news is, you know, as we were talking about a lot of these big enterprise software companies and high beta growth stocks getting absolutely crushed over the past 6 months, we are starting to see at least remnants of what looks like stage one bases starting to form. So if the S&P 500 and the NASDAQ make another low, which I do believe that they will, I think the S&P 500 and the NASDAQ will make one more additional low. The most important thing to look for is a lot of these enterprise software companies and tech stocks. You want to look for the ones that are quote unquote bucking the trend. And what I mean by that is if the market makes a new low, you want to look for the companies that are showing strong divergence, because I truly believe the vast majority of these profitable software companies that have been beaten down, I think they have bottomed. So they may revisit or retest their lows at least once more, but the good news is I don't think that a select few of them will break their lows. And if that happens, those are probably going to be the new true market leaders. But I do believe that the market may make one more additional low in relation to the S&P 500 and the NASDAQ, especially if earnings projections come out worse than expected. Melissa 2087 says, what store was that closed down next to the Old Navy and the Gap? I'm not too sure, but speaking of the Gap, I think they actually just announced, that, hold on one second. I think they just announced that they're going to be a new CEO of Gap. So I think the CEO from the Gap was coming over from Walmart. But yeah, there's going to be a new CEO at the Gap. He's leaving after 2 years. But those are pretty much dying businesses anyway. A lot of the brick and mortar businesses are dying, especially in pure play retail when you talk about clothing. And the reason why I say that is because of the inventory build that we've been seeing. So if we look at Walmart, if we look at Target, the C-suite at all of those companies actually came out and announced that you're probably going to see significant margin compression due to inventory builds from their supply chain issues. Because if you remember correctly, there was a huge wave of demand. Here's another good software company, Adobe here. There was a huge wave of demand after COVID. So a lot of these big businesses ordered way too much inventory because they were preparing for a worst case scenario. So I think if you're in the market specifically for furniture, outdoor furniture, if you're in the market for kitchen appliances, things like that, I think within the next 2 or 3 months you could get a pretty good deal in the third-party market. NBA Alliance has fired the CEO because he had gap in their earnings. Lady O says Elon Musk is getting cold feet on the Twitter deal purchase. Yeah, I think that, so to Lady O's point, I think Elon realizes that he paid top dollar for that deal. And when he announced that deal, I remember we did the stream and we said this is a ridiculous valuation to buy Twitter. And obviously, ever since asset prices have come down, the deal's looking a lot worse. So I think he's just looking for any excuse to try to get a lower valuation on the deal. So I think his excuse is saying, hey, Twitter didn't disclose the exact number of bots on the platform, in which case we're going to take them to court, so they're forced to disclose the number of bots on the Twitter platform. Now, I'm not a lawyer, and we talked about this last night, but I think it's very possible that they may be forced to do the deal. Because I think the breach of contract fee or the breach of contract penalty is about $1 billion. And the funny thing is, if Twitter gets $1 billion, I think that's more money than the company has ever made in the existence of the company, which is kind of funny. And if Elon Musk is the biggest shareholder, maybe he'll benefit from that. NBA Elias says, I hear a judge in a lawsuit can force Musk to buy the company at the price originally offered. Yeah, maybe. You may be right. Hey, British Grey is here. Good to see you, British Grey. Hope you're doing well on this very, very humid night in New York City as we head back uptown. MZ Relay says, does Amazon actually make a profit at their Amazon Go stores? I'm not too sure. Do they disclose that in their earnings reports? Their profitability on those Amazon Go stores? I'm not even sure they disclose that. I don't know. I would assume they don't, though. If I was a betting man, I would assume that they don't. Wow, NMB045 says, Tom, did you hear about the Rogers outage here in Canada? So was that the big outage where there wasn't any ATMs working or anything? So Rogers is one of the largest telecommunication companies in Canada. So NMB045, I think I heard about that a little bit, but please feel free to inform us a little bit more on that. But the only thing I heard is that there was a huge outage and nobody could get money out of the ATMs because the internet was down. I think that's why it's important to have wireless failover or wireless backup. Mary J says, Coke or Pepsi? Definitely Coke. 100% definitely Coke. Hey, Ernest Lovell says, Uptown looks nice. Good to see you. Lupe says, Tom, so are you on planes quite a bit? How do you distract yourself while on the plane, music or podcasts? I tend to read the paper a lot. So I'll reread Investors Business Daily. I'll reread Barron's. And if I do that, the flight is like nothing. Especially the flight from, let's say, JFK to Fort Lauderdale, or JFK to Miami, or LaGuardia to Miami. It's like 2.5 hours, but it feels like absolutely nothing if I'm reading. So I try to read. I don't really like trying to sleep on the airplane because I feel like I wake up and I'm just totally out of commission. So I think if I keep my brain entertained with maybe some reading or something like that, maybe it's a little bit better. Miguel says, do you go to the Met frequently? What's your favorite place there? So the Met, so the museum? Yeah, I mean, I think the last time I've been to the Met was maybe around this time last year. It's one of my favorite museums. You know, I will give you guys a recommendation, but here's the bad news about it though. My favorite museum, hands down, in the city is called the Henry Clay Frick Collection. Now, Henry Clay Frick was one of the industrialists during the Industrial Revolution with J.P. Morgan and the like, multi-billionaires, and he bought a house here in Manhattan. It's on the Upper East Side, and he used a lot of his wealth to collect really amazing artwork, really amazing sculptures, and when he died, he put in his will that he wanted his house to stay intact for the world to enjoy. So it's actually a museum, and it's unbelievable. And one of the things I like best about that museum is not necessarily the artwork itself, but it's the architecture of his house. Everything is totally intact. The place looks like a palace. It's unbelievable. But here's the bad news. I actually went to that museum last week. The museum is closed for renovations, but they did take all of the artwork and all of the exhibits and move it across the street. But it's not the same. I mean, the value of going to the Henry Clay Frick Museum is not just to look at all of the exhibits, but it's to actually enjoy the architecture of the physical house itself. So if you're in New York City, I would definitely check out the Frick Museum, because I think it's one of the best pieces of American history ever. I mean, you know, J.P. Morgan's, the industrialists, they made a killing, so definitely check that out. But the bad news is the house is actually closed for renovations. Let me just put my bag away, zip it up. I left it unzipped. And I'll give you guys a good view of the Radio City Music Hall here. Hey, Tiago Taylor's here. Welcome, Tiago Taylor. Miguel says, thanks for the recommendation. I am even more intrigued now that it is temporarily closed. Yeah, so it's temporarily closed for renovations. It's kind of a bummer, to be honest, but it's still worth going. So I think it's like 25 bucks a person. I think it's still worth it. But the real value of going to that museum is seeing the house with the architecture. It's absolutely breathtaking. The way I could describe it for you is if you've ever been to the Morgan Library, it's sort of like the Morgan Library but on steroids. It's that fantastic. So it's like the Morgan Library but a little bit better. So let's try to cross the street here. This is 50th Street. Hey, Gabriella says, any recommendations for November in New York City? I would just say Central Park. I mean, if you like to see the foliage, the leaves changing, I think Central Park is a fantastic place to go. If you like Korean food, I think there's a fantastic restaurant called Her Name is Han. It's actually owned by the same owners of Take 31. Very popular restaurant, but if you do want to go there, you definitely need to book about a week or two out. It's on 31st Street. It's fantastic. Really, really fun place. So Her Name is Han. I would also check out Take 31. They're both in Koreatown on 31st Street. It's a fantastic place over there. Photos from around New York says, I went to Her Name is Han. What are your thoughts? So what were your thoughts, photos from around New York on Her Name is Han? I give it a 10 out of 10. I thought that place was fantastic. Raul Roca is here, says the MLB store indeed. Bob says, hey Tom, have you ever been inside Radio City Music Hall? Yeah, I have. So I think the only time I've been inside Radio City Music Hall was for the Rockettes during the Christmas Spectacular. You know, I think if you're in the city in November, if you want to check out the Macy's Thanksgiving Day Parade, I think that's also a pretty cool thing to do. I definitely would suggest that highly. You know, I was thinking about streaming the Macy's Thanksgiving Day Parade this year, but I'm not sure if I'll be in New York or not. I probably will be, but I still got to see. I got to figure it out. Across the street is Neuberger Berman, big asset manager. Right across the street here is the UBS building. I think Marcelo's daughter works right here at UBS. And right next door is Mizuho, which is a Japanese investment bank, as we've talked about tonight on the stream. We talked about Japan a little bit with the Japanese yen falling off a cliff due to the crazy, egregious monetary policy decisions by the Bank of Japan. If you actually look up to your left, you will see the sales and trading floor of Mizuho. But it seems to be pretty empty. I'm not sure many of the corporate workers are back in the office yet, but Western Mass Dave says, Tom, make it happen. Macy's Thanksgiving Day Parade. We'd love it. Yeah, we'll definitely have to do it. We'll definitely have to do it, Western Mass Dave. But everybody, we are coming up. We are coming up on the 2-hour mark, which does mean I have to end the stream because I have to be up very, very early tomorrow. I am traveling almost all day, but I will be active in our Discord tomorrow to cover the CPI numbers, okay? So the CPI numbers, the Consumer Price Index, will come out tomorrow. It is by far the largest piece of economic data we are going to get on Wall Street all week. So we do need to be cognizant of that, but thank you everybody for joining the stream tonight. If you like these live streams and you want to join us next time, feel free to hit the subscribe button because we do go live 5 days a week at 8:30 Eastern Standard Time, where we walk around New York City and Miami and cover the financial markets. We'd love to have you back on the next stream. So James, thank you so much. War Walker, I appreciate it. Daniel G, have a great night. JP, appreciate you being here. 48, Valentina, thank you so much. Lady O, the one and only. Western Mass Dave, James, Dusty, Steve from Buffalo, thank you so much for joining. Sabrina Fair, Dusty Cole, JL, Palmettis, Mohammed, who else do we have? NMB 045, appreciate it. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. I'll see everybody right back here, 8:30 Eastern Standard Time on Thursday. Have a good night, everybody.